How do you do, ladies and gentlemen? I'm your host, Seth Julian. Today we're going to discuss a phenomenon that you see sometimes in the beginning of January for the first and second, never more than the end of the third week, where prices of stocks take a big pop. It doesn't happen all the time like many things in economic life, but it happens more often than statistics indicate that it would normally happen. Now you can research this. I researched it in a book called The Winner's Curse by Nobel Prize winner Richard Thaler, which I do not recommend. It is far too technical for most people. But it does have an interesting discussion on this subject, and I've been aware of it for many years. But the point I want to make today is we are definitely in one. It's hard to tell sometimes. It's not 100% reliable. It's way more than 60 or so percent of the time. But which exact 60% of the time, of course, is the difficulty. I started doing a little bit of research, and I see that in terms of the 1 year performance in stocks, and that's 1 year, that's the last year back. It's not year to date. Year to date is 3 days. But until, August, September this year, this is the column to watch, and then as the time goes on, it becomes year to date. Anyway, nonetheless, we see tremendous performance in the top 5 stocks, the S&P 500, the NASDAQ, the Tadawul, the CAC, and surprisingly, the Tel Aviv 125. Tremendous performance over the last year, and here's the 3-year performance. Even in the case of the NASDAQ, of course, unbelievable, and there are good reasons for that. And I did, further take a look at some of these numbers and crunch them down and did a little bit of analysis, and it became clear to me that I could explain most of them pretty easily. The case of the Tel Aviv 25, the boom in high technology security, the Israelis have a good hold on that market pretty well. The CAC 40 was a little bit less clear to me. Colleagues of mine assisted in the research for this, and we came up with the idea. First of all, LVMH and the luxury brands, which the French dominate, did fabulously well. The energy sector, which saw great profits due to the price rises in energy, particularly in Europe, profited. SocGen, Societe Generale, the big bank, also did well, driving up the CAC. So it is an index of only 40, so the heavyweights are more pronounced. But the CAC did the second best performance. The Tadawul, of course, because the giant Saudi energy economy is diversifying at a rapid clip, and there's a lot of investment money behind it. The NASDAQ, because of the technonauts, the techno giants, the monsters of technology, and of course the broad-based S&P 500 that just is evidence of the broad recovery in certainly the U.S. and sooner or later Europe as well. By the way, just in these stocks, I want to point out at the bottom of the list, Asia brings up the rear. I wouldn't say not surprisingly, but and this is a mistake. The Nikkei comes after the IBEX, but it's still in the top. It's number 15 out of 19, so it's not doing so well in the Nikkei either. But I just want to explain the effect a little bit. The effect lasts about 2 and no more than 3 weeks. And when it's strong, like it is now, the period of time we're talking about, those first 2-3 weeks in January, can account for sizable portions of the annual profit for the year. And so, again, if we go back to the raw numbers taken from a portfolio analysis on the investing.com site, we see that growth rates here are really, really fairly strong and likely to continue. And that it's fairly healthy into the early month. You take a look at the day. These are big jumps for a day for these. Well, Tel Aviv is not a big exchange listing, but take the starting with number 2, the CAC, the Tadawul, the NASDAQ. The big jumps. These are fairly sizable jumps in enormous exchanges. It's up for the day and the week and the month are going to be practically the same, but you see that it's following that pattern. So what I'm trying to say is we are in early days of what looks like a good display of the January price pop. It's a sign of enthusiasm. Things are likely to fall off by the end of January, and it may be difficult to regain the kind of gains that are possibly available now. I'm sorry to be so qualified, but this is the capital markets. This is hardly a sure thing. This is not the world's most reliable trade. But I can tell you, if you catch this, you're going to have start your year off very, very well. So it's a good opportunity for a lot of traders. They're getting fairly excited about this, and I wanted to share it with you as early as possible to let you know that it's a good opportunity to buy in on the indexes. Keep your eyes on them. They could reverse. God knows there's a million things that could blow up in our faces. Putin, the Kims are always a barrel of laughs. You never know what's going to be happening. But so far, holding steady, this is a good trade. So, ladies and gentlemen, this is Seth Julian with today's episode of Seth Briefs, wishing you all the ability to trade with confidence. Bye-bye for now, ladies and gentlemen.